Good morning, everyone, and happy Wednesday. We are set for a big day in the markets as the FOMC minutes report will release a little bit later today, but still, we are seeing some selling pressure this morning. Basically, every stock is trading lower today, whether you're looking at the S&P 500, Tesla, Apple, DraftKings, anything. It's lower in pre-market. But yeah, I mean, that doesn't mean that there will not be opportunity. But overall, Tom, I think we're set for a pretty nice day.
Yeah, we are, and I actually see that Oxy and some of the oil plays this morning are starting to pop back off. So maybe that'll be where we do see some nice upwards momentum. But man, so far today, the SPY just got destroyed. We fell through that big 450 support from last night, fell all the way down around 446.50. So that's a pretty big tumble below 450, Mike. And I will say it all happened in like pre-market trading. So definitely pretty big there. I know that those articles yesterday with Brannard talking about the Fed tightening at a more aggressive pace is definitely not good for the markets here. And as we can see, the SPY did not digest this news well overnight.
Yeah, true that. I'm looking at a couple different stocks right now. It looks like Nvidia is just tanking down. It's down around 3.5%, and even though it's like trying to come back up, like still a 3.5% gap down is kind of a lot.
Yeah, it is. I saw that this morning that the chip stocks really gapped down, like Nvidia, AMD, both of them really fell. AMD's nearing that $100 support again. Looks like Nvidia is getting pretty close to, well, it did fall below 250 this morning, Mike. Now it's kind of popping back up here at market open. But yeah, it looks like the stocks, I mean, honestly, Mike, I'm not too surprised if these stocks do end up coming up a little bit. I will say that move down in pre-market was pretty drastic for a lot of companies. Like you said, this is a pretty big move for a stock like Nvidia. And we can go look at other stocks like some of the airlines, like poor Delta Airlines here is really tanking off. We have Palantir also moving lower. So lots of stocks are just continuing to turn back to the downside. Even like SPCE and DWAC are tanking again.
Yeah, true that. Yeah, I mean, it's definitely a red day so far, obviously. Looking at some of these comments, we have Keisha saying, "Morning, guys. Love this channel." Thanks so much, Keisha. We really appreciate you. Morning, Michael. Jeremy said, "Morning, let's get this money. Let's go." Lou said, "Morning, everyone." So, yeah, thanks for joining, guys. You guys know the drill. Let us know what stocks you're watching, and we could definitely take a look at them. But, Tom, what stocks are you watching heading into the FOMC today?
Yeah, leading my watch list today is just the three oil plays. We have Oxy, Halliburton, ZOM, and CVX all leading my watch list. But I will say they're not really popping off. It looks like CVX and ZOM are just kind of staying stagnant. Like I said, a lot of stocks are in the red today. So unfortunately, I'm going to be looking for a lot of breaks below support. Like with DraftKings, they're hovering right around this $18.50 support. If they break below that, I feel like they could start to maybe run down with some more momentum. Same thing with like Teladoc here. It's starting to really run down here at open. Just like a lot of these growth plays, like even Roblox here, big red candle at open. So I'm definitely watching for some more moves to the downside. I wish I could be saying that we're still back on the uptrend, but it looks like with the Fed's hawkish comments yesterday, we're definitely going to be in for like some volatility later, Mike. That FOMC minutes is going to be coming out at 2 p.m. Eastern time. So as we await this, the SPY continues to move lower. So I'm really curious to see what's going to happen when this minutes meeting comes out. Hopefully the market gets some renewed optimism, but I have a weird feeling that with all the hawkish tones lately, we might have more downwards movement here.
Yeah. And like even Jerry said, growth is getting killed. It hurts. Yeah, it definitely is. Like Tom pointed out, Roblox, Unity, DraftKings, a lot of other ones. Even Disney's selling off in a decent way today. Even like Boeing, Tom. Like Boeing had a lot of good news like I posted in Discord. Let me just read it out. So recently on the popular news, we had news of Boeing and Microsoft deepening their partnership in digital aviation. We have Amazon and Boeing expanding their relationship, especially for Amazon Web Services. And then we have Boeing and Google have a cloud partnership. So it's like you have partnerships from Amazon, Microsoft, and Google. Like, what else can you ask for?
Yeah, that's pretty big, Mike. I mean, you would definitely expect some nice upwards momentum with them, and they just continued to move lower here today. I wonder if they're just following the overall airline sector, because I'm also noticing that like American Airlines and Delta Airlines have pretty similar setups. But you're right. I mean, that sounds like pretty good news. And that those are some big companies, Mike. Like, Amazon and Microsoft are two of the biggest out there. So you would think that Boeing would get some nice upwards action out of that, but they had nothing this morning. Looks like in pre-market they might have shot up initially for just a second, but besides that, we've just been straight down. I can't believe we fell back below that 180 support again, Mike. Like today, it's just been brutal.
Yeah. All right, true that. Looking at a couple different plays right now. It looks like gold is holding its ground pretty well. I don't know if you saw that one, but GLD is looking pretty decent.
It really is actually, Mike. This is nice. It's actually bouncing off that like 179, 180 support. It's holding up very well, and I'll definitely have my eyes on this because gold, it actually recently hit highs of 193 and then fell back down and consolidated for a while here. But I will say, like, if the market does start tanking off more with the Fed's tightening here, I would definitely maybe expect gold to pop back up. And as we've been saying, inflation is still getting pretty rampant. Like, it's not slowing down really. And at the same time, you would maybe think that some of these metals and commodities would start to go back on the uptrend. We've started seeing that this morning with oil a little bit too. Crude oil has been consolidating. It's starting to pop back. So I'm curious if some of these commodities are going to start popping again. Even maybe some of the ones like ZC, like corn, over the past like 2 or 3 days, it's starting to reapproach those highs up there. So I'll be curious to see if we see another breakout.
Yeah, we'll see. I think gold and silver will do very well over like the next like 5 to 10 years. Yes, it's been moving up over like the past year or so, but I feel like it will continue to move up a lot more. Kind of like as you said, as inflation continues to get worse. And when you think about it, Tom, like gold has just been doing nothing for almost a year now. So it's at a decent level. I like it. And what's really good about gold and silver is they kind of just move by themselves. Like sometimes they'll move up with the market, sometimes they'll move down with the market, but for the most part they just do whatever they want.
Yeah, they really do. Sometimes these commodities, they have some weird stuff go on that really sets them apart from everything else. And the cool thing with gold and silver is that there's so many foreign influences on them. Like China has a lot of gold, Russia has a lot of gold. Even like Britain and countries like that, they just like to hoard gold up and buy it because obviously for the longer term, it generally holds up pretty well. And then as we know, Mike, it's a pretty good hedge against inflation. So it's definitely a good thing for the longer term. And, it has a big backing. So I like it. I'm with you. I think for the next 5 to 10 years, it'll definitely start to do well. An interesting thing to look at is like on GLD's chart here, we're finally like back to these levels that we were at from back in like 2012. I'm curious to see if we'll get a bigger pop. Like I'm really hoping GLD eventually starts to break $200 here, maybe over the next like 6 months or so.
All right, good stuff. Let's see. I'm doing a couple different scans to see some plays for today. Let's see. It looks like Zoom is kind of leading the way to the downside, down around 6.2%.
Wow, yeah, it's really falling off, Mike. It fell below this 116 support from this week. It even ended up falling below like 118 this morning. So pretty big drops here out of Zoom. And I can't believe it's already down to like 114 today. Those are two brutal 5-minute candles here, down 6%. Let's look at that daily chart here because, Zoom kind of looked like it was going to have some renewed optimism to the upside, but we're still seeing like a lot of selling pressure coming in. I'm really curious where the price action is going to go here, Mike. Like, are we going to still like maybe taper off around maybe like 113 or 110, or are we going to start finally moving back down towards $100 again? And I really hope it's back to the upside because, man, if we start retesting 100, I'll be a little sad here again.
Yeah, I'm with you. I've been buying Zoom for months now, and it's been selling off quite a bit. Their fundamentals are actually really good for a growth company, and I still think Zoom will continue to do very well. Obviously, it was very overbought when it was getting very hyped up with COVID and everything like that. Like we could see over the past year, it had a high of 406, but if we go even longer than that, it was almost at $600 at one point. I believe the high was 588. So clearly, it was overhyped. A little over a year ago. But I feel like right now a lot of people are overlooking it. They continue to post record revenue every single quarter. I know a lot of people and analysts were thinking that Zoom's revenue would take a big hit once COVID settles down, but that has been proven to be false, as every single quarter it just brings in more and more money. At the same time, in their most recent earnings, they announced that they will be investing a lot into just keeping their platform up to date and adding new features like that. So either way, I'm going to continue to buy them. They're pretty good fundamentally, especially when you compare them to other growth stocks. So I like them.
Yeah, that's a big thing. I will say, like, whenever I started looking at a lot of fundamentals on these growth stocks, Zoom was one of the only ones that was actually like having some positive numbers. Like, whenever we look at some of these other growth plays, like DraftKings, for example, and stocks like that, I'm not hating on them or anything, but obviously a lot of growth plays, they just have a lot of issues in the beginning. And like DraftKings is spending a lot of money on advertising and stuff like that, along with these other growth companies. So it's definitely cool to see Zoom doing a lot better, but their stock price hasn't been doing better, which sucks. But I will say, like you said, it's definitely a good opportunity down here, in my opinion. Honestly, I hope, if we come back towards $100, I won't be too sad, because I'll definitely be looking at it for the longer term again. But still, it's definitely, I hope we start moving up here eventually. Maybe that next earnings report will go better, Mike. I know that last one was actually pretty good, but Zoom still just ended up falling off over the next couple of weeks. So hopefully we see some renewed optimism out of this one. And even some of the other growth plays, like I know even DraftKings, like, sure, they're not profitable like Zoom is, but at the same time, I still hope that maybe like with states legalizing and stuff like that, soon they will finally be there. But that's the main hope. We just need some renewed optimism out of some of these companies. And it's not even just these two. There's tons others like Palantir, Unity, Roblox, Matterport, stocks like that are just beaten down, and they need some renewed hype or some renewed optimism here, kind of like what Twitter got. Twitter finally got some good news. Elon, obviously that's the best case scenario, but still, I mean, they finally got that hype that I feel like a couple other companies are going to come in with eventually.
Yeah. All right, there we go. So I just did a couple quick scans to see some plays that we have forming. It looks like Apple is currently at its low of day, and it's breaking lower by the minute. So that's one to keep on your watch list. Another one, we have Tesla basically doing the same thing. And Tesla's actually right at that one. It's getting closer to that $1,000 level, which will be very big. But then again, Tom, it is like $60 away. So I feel like realistically, it probably wouldn't even test it until tomorrow, unless the FOMC minutes were really bad.
Yeah, if something goes crazy, it might get down there, but I'm with you. I don't think I would expect to move all the way down to there today. Maybe like 1040 or like 1030, maybe something like that might be more realistic. But yeah, I mean, it's already down 3%, so it's definitely starting to move in a major way. I like how you mentioned some of these bigger companies here are really moving lower, like Apple, Mike. This is a pretty big support actually at 172 from late last week on Friday, and we're really starting to move below it today. So definitely having some pretty big breaks of support. Microsoft's breaking their support around like 306 or 305 as well. So we're definitely seeing some bad price action today, unfortunately. And I know yesterday was a pretty bad day in general, and it just continued this morning. So hate to see that. Also, kind of going into some of these like credit card companies and banks, looks like Visa's kind of moving a little bit lower today, and Bank of America really started to sell off along with JP Morgan. So we're definitely seeing some lower moves out of banks too, which is unfortunate, because I know JP Morgan has been dipping a lot lately, and looks like it's getting pretty close to those lows again.
True that. Roblox is continuing lower. That one's at the low of day. Even Plug is lower. Peloton's another one that's selling off in a pretty big way. Snow, AMD. So as of right now, Tom, it's definitely looking like a put type of day.
Yeah, it really is. I mean, this has been some rough selling pressure. I was really hoping, like early in the morning, we had some bad movement to the downside, and I was hoping that maybe whenever the market opened, some of these stocks would start to recover back up. But as we know, whenever it rains, it pours sometimes, and man, these poor stocks just continue to fall. It's unfortunate to see, because some of these growth plays, we're starting to really go back on some good uptrends. Like Like in DraftKings case, they were running up towards like 21, almost $22 there, and then they started tanking right back off and just gave all the gains back. So it sucks to see, Mike, because like I said on that daily chart, it looked like a lot of these stocks were gonna finally start going back on the uptrend, but I have a weird feeling now with all like the Fed tightening and all the hawkish tones, we might continue to see some more selling pressure in the short term, which I know some people have been looking for, but I feel like the overall market's just honestly been waiting for another uptrend because as we can see here, like a lot of these stocks are down. They've been going down now, Mike, for almost like 6 months, 8 months, and in some cases, like in Zoom's case, like over a year and a half. So like it's insane to see like how long this downtrend's been lasting.
Yeah, true that. So yeah, I mean, we basically covered all the top plays, Tom. We're still very early in market open, So what are you seeing? Because all I'm seeing is a bunch of selling pressure right now.
Yeah, same. Just a whole bunch of selling. I will say there is some upwards momentum out of some of the defense plays I saw. Like Lockheed Martin is actually having a nice move to the upside. So this one's looking pretty good today, actually, Mike. I will say they had a nice move yesterday at open. They started consolidating, and then this morning they're pointing right back up. So this is actually looking pretty good here. Also, Northrop Grumman's looking great as well. General Dynamics is not looking as good as like Lockheed or NOC, but I will say it's definitely looking decent today compared to most stocks. Looks like we have X starting to point to the upside. I know U.S. Steel has been a big one with the commodities. Looks like Kraft Heinz is also in the green, which is interesting. I know this one's just a slow mover, but as far as stuff to the upside, it looks like that's about it. I do also have Pfizer running up today in a major way, Mike, which is interesting. I will say Pfizer's definitely going against the market here. Like, look at this type of green movement. This is pretty good actually for such a bloody market.
Yeah, that's true. I'm curious if there's news with this one. Let's see.
I'm actually not seeing anything. Maybe some stuff with like the new. I did see some stuff about some like COVID vaccine like booster shots. Maybe that has something to do with it.
I saw something. I think it was in like the United Kingdom. I thought there was like a new variant. I didn't really read the article, but maybe that's it too. I don't know. I haven't.
Yeah, I did see some stuff with that new variant, and I will say the past couple weeks I have been seeing a little bit of articles about some type of new like stealth variant, or maybe they have a new one now. But I've definitely been seeing a lot of stuff regarding COVID lately, so maybe that has something to do with it. Let's see. It says Novartis CEO shakes his head up, says it will save more than $1 billion annually. So I don't know how that has to do with Pfizer, but I will say it looks like there is some news on the Thinkorswim news tab over the past couple of days, and a lot of it seems like it might have to do with maybe some of these booster shots related to some of the new variants and stuff like that. But either way, Mike, I mean, it's definitely having some nice movement, and we are running up into some big resistances and starting to break them. So like it's awesome to see him popping above 52 and now up above 52.50 even.
Yeah, and then Jerry also mentioned how Shanghai is under their COVID lockdown, so that might have something to do with it too. I just think it's interesting how, Pfizer is up like let's say 2%, but then Moderna is down like 2.5%. Like normally they move together, especially when there's like COVID news.
Yeah, you're right. That is weird to see the difference here. Moderna's down 2.7%, definitely not looking good. And even on the daily chart, like if we compare Moderna and Pfizer, they look like totally different like the past like couple of weeks. So that's pretty crazy because I know like for a while there, whenever Pfizer started going back on that uptrend, Moderna was following them and they were both starting to rip back up. But yeah, I mean now it seems like Pfizer's the only one with the renewed momentum. I will say I did see that ABBV is still moving up. Mike, like, what's up with AbbVie? Like, this stock has been a straight-up powerhouse. I remember you were hyping this stock up, like, 6 or 7 months ago. Like, man, I wish I would have bought this one.
Yeah, it has been a powerhouse, Tom. And to be honest, I'm kind of surprised how long their uptrend has been lasting, like, the way it has been. Because it's been, like, very, very strong uptrend for... What is it, like 5 months now? More? Like, what I mean?
It really has. Like, honestly, ever since like last September and October, it just went straight to the upside. And like you said, like it might have pulled back very slightly like at the beginning of the year, but other than that, it's just been straight up. And I can't believe it. Like I would have definitely expected a pullback maybe around like 150 or even there like around 140. It was starting to get pretty overextended. But man, like this one, honestly, I don't think I could buy it now because it's so high. But at the same time, I mean, they are ripping, Mike, and I guess they're having some good like numbers because I will say like I have read into AbbVie a little bit over the past 6 months, and the way that they operate is pretty interesting with especially with how they help people out too.
Yep, so that's good. I'm just continuing to see more and more stocks turn over, Tom. We also have like Facebook trading lower now. Like that one's breaking its low of day. And these stocks are breaking in like some pretty volatile ways. You know, it's not like we're just seeing like little slow, gentle slides, you know, to the downside. It's like, you know, Nvidia down almost 4%. It's like run down 7%, you know? So these are some pretty big moves.
Yeah, it is. Even poor Square here down 6%. So we're definitely seeing that momentum. And, we've been talking about it ever since market open, especially to me, Mike, like whenever these stocks started breaking their supports, it seemed like a lot of stocks started breaking at the same time. Like Boeing was breaking its support, Square was breaking its support, Facebook starting to break support. Like it's just crazy to see all these stocks moving below such key levels. Even poor Tesla here, like it just keeps extending to the downside. And Tesla had some really good hype Monday morning. Remember, it was running up with Twitter whenever they announced Elon bought the big stake in Twitter, what was it, Mike? Like 9.2% to be exact.
Yeah. Yeah.
Yeah, 9.2%. It started really running up there with like in sympathy with Twitter, and then now it's starting to really fall back off, unfortunately. And yeah, it's just it's definitely not a good day for any stock in the market. And like Mike, like let's go back to like the main reason why this is probably happening. And in my opinion, it's because of all the hawkish statements from the Fed. They're talking about raising interest rates at a more rapid pace. They're talking about increasing their tightening here. So this is going to be, it's definitely going to be an interesting time for the markets. And, we've been hearing a lot about the yield curve starting to invert. I know a lot of people start to use that as a good, like, indicator for recession and stuff like that. And, we're seeing 10-year yields start to rise. We're starting to see mortgage rates, the 30-year fixed rate, Mike. I actually have a really good article here by CNBC. It ended up crossing 5% today. Let's look at this little chart here. You can see that since the beginning of this year, it went from almost like 3.3% all the way up to 5% now. Year to date, it's up 53% on the 30-year fix. So, I mean, we're starting to see some pretty big moves out of some of these big economic data points.
Wow. I knew the rates were rising, but I didn't realize the 30-year mortgages were rising like that. That's big, Tom. That's a lot. So
yeah, it is. I mean, it's crazy, and I think it's going to drive a lot of fear in here. And then we're getting more articles saying that these surging interest rates have mortgage demand down more than 40% from a year ago. That's pretty big because I know the housing market has been booming. So to see it now starting to fall off 40% is pretty big. But yeah, I mean, that 30-year fixed rate up 53% year to date, that's big, and 5% is no slouch.
Yeah. Great info there. And then, while we're on the topic of interest rates and stuff, we have Sean saying, what are the FOMC minutes? Why is it so important? So basically, like a summary, like easy to understand way, the FOMC minutes is essentially a summary of the previous Fed meeting, but it gives us more clarity on what the leaders of the Fed are actually thinking. So the Feds they hiked interest rates in their previous meeting. The FOMC minutes that we're going to see today, we're going to understand more about why they did that and what they were thinking and discussing while they were making the decision to hike interest rates. The FOMC minutes gives us like more clarity on how these top Fed leaders are actually feeling about the market, economy, inflation, and things like that. If they're extremely hawkish, which it means like they think that interest rates need to rise a lot, then normally it's bad for the market. At the same time, if they're a little bit more dovish, which is kind of like easygoing and low rates and stuff like that, normally the market responds in a bullish way, but it all depends on number one, what was said to make the decisions for the previous meeting and how it was said. And that's exactly what the FOMC minutes will show us today.
Yeah, it will. It'll give us a bit more of like an in-depth view. And, Mike, like look at this chart here. So this is a nice chart by Trading Economics here. You can see they're pretty much forecasting how the interest rates are going to rise. And you can see that like with the way the Feds have been kind of forecasting them raising rates, you can see that they put out a nice chart here to where by the beginning of 2023, they're kind of forecasting the interest rate to be around 2%. I know lately, Mike, we've been sitting at what, like 0.25% ever since COVID hit because, the Fed implemented their easy policy. But as they start to, tighten here, we're going to see that interest rate start to rise back up towards 2% again. I think that was their target, something up there. It looks like the Fed funds rate is projected to trend around 2.75% in 2023. So that's going to be a pretty big increase from where we are now. So we're definitely going to have to brace for more interest rate hikes here over the next few months and obviously maybe even the next year, kind of like Powell's been indicating for a while.
Yeah, very true. And another thing I want to say really quickly is like, while it sucks that rates are rising, it's also a necessary thing. Like, you can't just print out trillions of dollars and pump it into the economy and have nothing bad come out of that. As we all see, inflation is, I don't want to say getting out of control completely, but it's pretty bad. And hyperinflation is like one of the worst things that can happen. So, or like economically speaking. So, while it does kind of suck in the short term with rising interest rates, it's a necessary thing for like the long term. And a lot of times the markets did rise quite a bit during like Fed rate hike cycles. I know Tom and I had like a chart of how the markets performed during rate hike cycles, but I don't know if we could find it at this point, Tom. That was like months ago.
Yeah, I'm trying. I think I actually found it. Let's see. I believe it's in this article right here. Let's scroll down here. Maybe it is, maybe it's not. Nope, I don't think it is. This one's just showing like the CPI and stuff like that, but you guys can see how this how the inflation's starting to really get out of control here with some of these charts. Like look at this consumer price index chart, or you could say the CPI. You can see how high it's getting. I mean, we're above levels that we were in 2008, Mike, which is I know everyone goes back to 2008 with a lot of their theories on the market, and man, to see us higher than there is insane. And we're getting back to levels from like the early 80s and possibly even the 70s at this point. Like it's starting to just spiral out of control. But yeah, I wish I could find that other chart, but you're right, it was a while ago.
All right, so I think I found it. It's not the original one we used, but it still serves the same purpose. So I'm just going to like override it on the Zoom, Tom. So I'm just going to show it to everyone really quickly. All right, so as you guys can see on the screen right here, we can see this little chart right here shows how the U.S. stock market performed during rate hike cycles. And it was basically green every single time with the exception of like 1972 to 1974. Like I said, every single other time the market did go up. So just keep that in mind. Just because rates are rising, it doesn't necessarily mean that markets will fall.
Yeah, it doesn't. And that's a big chart, Mike, because I know that like whenever we saw that chart last time, it really surprised me because, obviously like whenever I first started trading in like 2015, 2016, somewhere around there, like the overall market was pretty insane. So like I remember back then there was a lot of stuff with Yellen possibly raising rates and stuff like that. I remember it was obviously a long time ago, but I remember there was stuff with the Feds raising rates back then, and obviously the market would take a bit of a dip in the short term and then start to go back up and stuff. But it's so interesting to see how the market reacts to the Feds raising rates, and that chart is really telling because if we just went by like overall thoughts and like what like the overall sentiment is, you would think the market would take a big dip, but that chart's really telling to show that the market does end up holding up, and like you said, it even goes up in a lot of cases. So that's good. Of course, there's some scenarios where it went down, but over like a 5-year period, it seems like it's usually up.
Yeah, you know it. And then we have Keisha saying it's interesting that Target and Walmart are in the green. Let's see. Target. Well, Target just went in the red. Let's see. Walmart. Yeah, Walmart's in the green. But yeah, I mean, I know what you mean though. I mean, they're definitely holding up a lot better compared to like the overall market and so many other stocks. But I feel like a lot of these value plays, Tom, like Walmart, Coca-Cola, Procter and Gamble, maybe Kraft Heinz, have been outperforming a lot of other stocks lately.
Yeah, they really have. And, I think that just goes to show you maybe their safety. I know that a lot of times people talk about these stocks being super slow, safe movers. And, they're just proving to continue to show that point. Not necessarily in Kraft Heinz's case, because, if we look at like a max daily with them, they did have some issues back, 2017, 2016. But if we go to something like Coca-Cola or like Pepsi or McDonald's or something like that, just a nice steady chart. It does take dips here and there, but generally then they end up coming right back to the upside. Walmart, like we mentioned, it's doing very well, but it's not necessarily explosive. It's still, it's been consolidating for almost a year straight. So while it is holding up and doing well, keep in mind it hasn't had the explosive movement that a lot of these growth plays have had. Like if we look at something like Zoom, it ran up to 588. Now it's all the way back down to 114. And I know market caps make a big difference with this, but I'm just showing because the volatility is totally different on these stocks. And who knows, maybe we'll finally see Walmart start to break out because, I will say, Mike, like whenever we see inflation and stuff like that getting higher, that means people have to pay more for certain products and stuff. And a lot of times companies can start to pretty much raise prices and then blame it on inflation. And I think we're going to start seeing that with some of these bigger like retail stores like Walmart and, like Kraft Heinz, who sells a lot of like consumer products, and other companies like Nestle and Clorox and places like that.
Yeah, for sure. Yeah, I mean, we're clearly seeing investors flock into safety. We've been seeing it for the past couple of weeks or even over the past couple of months. That's why we have stocks like Coca-Cola, Walmart, Procter and Gamble, up, even Costco too, uptrending in near highs, while we have the more speculative growth stocks towards 52-week lows. But yeah, I mean, it will provide an opportunity for in multiple different ways. Of course, if you are willing to own growth stocks, they are trading at, a lot of them are trading at great discounts. And at the same time, if you're looking for that safety, the value stocks will likely provide that. And like even like gold and silver, like I've been saying that for weeks or months now. I think that'll be very, very good over like the next like 5 years or so.
Yeah, I do too. I think that'll be really good, especially if the inflation keeps getting out of control. Like we were looking at some of those inflation charts, and sure, inflation's high right now, but could you imagine if we went to like inflation rates of like the 70s and stuff? Like, I don't know if anyone's like went back in time and like looked at some of those inflation charts from back then, but man, I mean, it was pretty insane. Here, I'll try to pull it up really quickly if we have a max chart here. Yeah, like let's look at this. So in like the 70s, like around I don't know what this is, like 77 or something really close, the interest rate was, or I should say the inflation rate was hitting around 15%. Like that is insane. Like the last time we were hitting that was after the Great Depression. So, we're honestly starting to fly back up now, and I'm just curious to see how high the inflation is going to get. Hopefully the Fed tightening slows it down here, Mike. That's obviously why the Fed is starting to come out with all of their statements and why they're starting to raise rates so rapidly and stuff. So with them doing that, I mean, obviously you would think it would make it slow down a little bit. So hopefully we see that slow down sooner rather than later.
Yeah, no doubt. Let's see. Yeah, I mean, I'm trying to find some other interesting plays for today. I'm not seeing too much. I mean, it's just really just stocks selling off more and more by the minute. It looks like Roblox is one of the leaders to the downside for me today, which is down around 8%.
Yeah, me too. It's definitely in like my bottom 10 stocks here. Unfortunately, I have a lot of stocks like falling lower than 7%, which is not good to see. The one that really catches my eye, Mike, is Snowflake. I'll tell you, Snowflake is down 8.7%. Can't believe they're down this much, but I will say, like these growth stocks, Mike, while they are down 8% today, a lot of them are still off their lows quite a bit. Like Snowflake's low is 164. We're still sitting at like 207 here. And like even in some of the bad cases, like Roblox, it's still up. Like Roblox's low is 36 and we're still sitting at 45. So I'll be honest, like we still have some room to the downside if these stocks are really going to sell off. So I hope they end up, consolidating and going back up here pretty soon. I will say it looks like in like Roblox's case, it's approaching a support from last week right around like $44. So we'll have to see if it can hold here or break. And I feel like lots of stocks are in this type of setup where they're approaching supports now. Like looks like RUN is starting to run back down towards support. Same thing with Square even. Square really honestly just broke below a big one right around 128. So it's definitely a pretty crazy day today, Mike. And it looks like the only stocks escaping the downtrend are like those safe value plays we talked about.
Gotcha. All right, we have Vicky saying hit the like, guys. So yeah, if you guys like the stream, it would help us out so much if you could smash that like button. It only takes like 2 seconds, and Tom and I would greatly appreciate it. We have no mentioning CVX and how it's going up. So Chevron, yeah, it's definitely outperforming a lot of other stocks today, and kind of like what you said, Tom, like the oil plays were looking pretty decent at market open.
Yeah, they were. They were looking pretty good, and Chevron had a really good move there. Nice extensions up through resistance at like 165.50. So glad to see it having this type of nice action here. If we go look at something like Oxy, though, it had some nice movement at open and then started selling off, and it is coming back now a little bit, but I'd like to see it moving in just a better way. Chevron definitely had a better chart there in my opinion. So I hope like Oxy can start to move better. Looks like Exxon kind of followed Chevron up there. So I will say I think I like the chart on Exxon and Chevron a little bit more than Oxy so far, but that doesn't mean it can't change by market close. And I'm really curious to see, Mike, if a lot of these big players are still into Oxy or not, like Warren Buffett. I know he's usually getting in for the longer term, so I'm really curious to see how long he's going to be in for. Didn't you say Carl Icahn was selling out of his position up here at the top?
Yeah, so Buffett's buying billions. Carl Icahn already sold billions. So it's definitely interesting. I know Icahn made billions on that trade, and
Yeah.
I would assume Buffett's definitely going to hold for the long term.
Yeah, I'd hope so. I mean, who knows? He's getting old, so maybe he was making a shorter term trade for once. I mean, I hate to say it, but man, we might not have Buffett around much longer. So, we're gonna have to really cherish the time we have with him and Berkshire. Because let's go check out Berkshire. Because I will say, if people haven't looked at Berkshire in a while, their chart is insane. So here, let's go ahead and see it on the daily. On the 1-year daily, you can see it's really starting to grow, but look at the max weekly chart here for Berkshire. I mean, it almost doesn't get better than this, Mike. Like, for such a large fund to grow this much, I mean, they're making some good moves here.
Yeah, look at that. And what's interesting, too, is, like, Berkshire is doing very, very well, especially in a time where, like, a lot of stocks are down, too. You know what I mean? So, it's pretty awesome.
It is really, and I'll tell you what, like, you almost wouldn't expect Berkshire to outperform stuff like Apple and stuff like that, but I'm not saying it's outperforming Apple, but the chart looks pretty good. Like it's not an Apple. I will say it's not that, but if you look at Berkshire, it's definitely doing well enough that like if you compare it to like a Walmart or like even like an Amazon, it seems like it's doing better. Like I know Amazon maybe percentage wise has done better, but just like looking at like the volatility and the movement, like you would think Berkshire would be a little bit, slower moving, Mike, maybe a little bit, maybe like a Walmart or like one of those value plays. But man, I mean, it's been really popping off here with the way stocks have been exploding after COVID. And I'll tell you what, I know a lot of people were saying Buffett had made some bad decisions, like whenever he sold out of some of those airlines at the lows and stuff. But hey, I'll tell you what, maybe he made a bad decision there, but his gains on Apple and stuff are insane.
Yeah. I'm looking at like the holdings of Berkshire. So Apple represents, according to HedgeFollow, 47.6% of Berkshire's portfolio. And then we have like Bank of America at like 13.6% and like American Express at 7.5%. So Apple, Bank of America, and American Express are the top 3 holdings.
Oh my gosh, Mike, look at this. You said Apple was in the top 3. I remember when I saw this article come out a while ago, Warren Buffett makes over $120 billion on Apple's rise to over 3 trillion among his best bets ever. Like, that is nuts, Mike. $120 billion on Apple's rise to 3 trillion. That's nuts. And I know he's been in for a long time. I remember, if you read this article, he began buying Apple stock in 2016, and by 2018, he is accumulated over 5% ownership of Apple, a stake that cost over $36 billion. So now it's worth $160 billion. That's a big trade.
Yeah. Wow. Yeah, I'm like looking through some of his other holdings right now. You know, like I said, he's kind of heavy with these bank stocks, but it doesn't look like he's like over leveraged by any means. He's also been, as we know, buying up Oxy lately. It looks like he also increased his position in Chevron. What else? Yeah, I mean, looks like just like, I don't know, he has like a decent stake with General Motors and like Snowflake actually, but yeah, besides that, I mean, it's very impressive about the, just the returns that Berkshire has been getting.
It is. And, maybe a lot of that has to do with, obviously like, what should I say? Like fees and like management costs and stuff like that. But, still though, I mean, that's a pretty telling chart when you see Berkshire's like max weekly outperforming at that type of pace. But yeah, that's big. And actually, I know you brought up General Motors, Mike. They're starting to fall down a little bit here, back down around this $40 support. On the daily chart here, I know General Motors and Ford have been dipping a lot lately, and it looks like now is not the time to buy. I mean, I think it will be the time to buy maybe over the next couple weeks, but for right now, these things look like they're going to maybe fall below these supports with some momentum here.
Alrighty. And then let's see. So looking through some of these comments, it looks like we have George and Iranical both talking about AMD and how it is descending to that $100 level. It is sinking lower, Tom. I know we were talking about this one, what was it, like maybe two or 3 weeks ago in the Discord, and we were both saying it to the downside. And, Tom, we're approaching a very crucial level. It's going to get exciting with this one.
It really is. That's a big level down there at $100. And, like, let's look at AMD. The past 3 times it's touched 100 ever since the beginning of this year. It's touched 100 and flew up in some major ways. So, back on like January, it looks like January 28th, we touched right around 100. And then just a few days later, by February 2nd, we were all the way back up to 130. That's a pretty big increase there. Then we were hovering around $100 again. Back at the beginning of March, ran all the way back up to 125 again. So that's another like 25% increase right there. So AMD's been having some big moves off this support. But I will say, Mike, like as AMD starts to descend down to this one again, I'm going to be pretty worried this time. We're seeing lots of stocks, kind of like what I just talked about, Ford and GM starting to break below their supports in major ways. We have stocks like Facebook starting to fall back down towards their supports. And if these stocks start breaking supports again, I think we're going to start seeing some pretty big sell-off. So it's definitely worrisome for me, Mike. And I really hope that like a lot of these companies can start to come back. But I mean, you're right. Like these stocks that are falling over and just moving lower like minute by minute is just not good. Like even these poor plays like Unity and like we even talked about with Buffett, like Snowflake, like I just can't believe how big some of these plays are starting to sell off here.
Yeah. All right. Looks like Bravo joined the stream. He said, "What's up, guys? Can you guys talk about SPY levels? What are you seeing on the SPY, Tom?"
Yeah, last night I talked a lot about that 450 support. And as we can see today, I mean, this morning in pre-market, we blasted below 450, came back up, retested it momentarily there, just very, very slightly, and then got an utter rejection right back to the downside again. And now today, we ran all the way down to 440, 450. And I remember in the past, Mike, 444 was a pretty big level for the SPY. So for today, I will think that 444 will be a big support for me. Keep in mind, though, that the FOMC minutes can change everything. Like these supports and stuff aren't going to matter whenever that comes out. Like the SPY if the market reacts well to it, it'll just start blasting up through these resistances like it's nothing. If the market reacts negatively to it, it'll probably start blasting below these supports. And I would lean towards the SPY going down today with all of the hawkish comments, but I will say the market seems like it likes to surprise everyone. But that 444 support is probably going to be pretty big today. And it looks like we did have some price action at 446. And I know I've had 446 on my chart for a long time too, so I would definitely look at that as a nice resistance.
All right, good to know. And then Bravo also mentioned some levels on TLT.
TLT, now this one's a little bit different because, as we know, this one follows bonds and stuff like that. But look at this on the 1 year daily, or I should say on the max daily. TLT is starting to fall below some pretty big levels, Mike. Like TLT was consolidating a lot there around 130. Now we're starting to break below it in a major way. And Mike, this makes me kind of think back to Michael Burry's position. Do you remember how he was bearish on TLT for a long, long time? I wonder if this is finally starting to play out well for him here. But either way, it's falling off in a major way. It's breaking below, like I said, 130, which was a big level. But as it starts to fall, looks like there is another smaller support here, like in my opinion, around like 126. And then below that, I have a more major one around 125. But I will say, Mike, keep in mind, this one moves more on economic data rather than supports.
Yeah, I'm actually very curious about how Michael Burry is doing, or like how that trade went. Like even Jerry just brought it up. He said, I wonder how his Tesla positions are doing. Because I remember he wasn't not like, yes, he was technically short on Tesla, or he had a ton of puts on it, but it was more so a bet on inflation because he hedged his Tesla position and his CLT position with like Apple calls, I think Facebook calls, and I think Google calls. So I'm very curious about what ended up happening with that whole trade. I would think that the Tesla options would expire worthless by now, but I could be wrong.
Yeah, and I'm curious to see like what type of positions he exactly had on TLT. Like I'll have to go back and read some of those previous articles there and some of those previous reports and see exactly like what he had. But yeah, I mean that's pretty big. That I'm curious to see too, because TLT's been falling off in a big way. Like it's now below the levels we were at like the lows of 2021. So it's pretty telling now to see it all the way down at 127. And I want to maybe go on some of those like options chains here and check out to see like maybe how some of the options are doing that maybe expire in like January of 2023 or something, because that might kind of show us, because I'm curious to see if the options are even up a lot, because as we know, Mike, like whenever things consolidate for so long like this, sometimes you just get hit with those theta decays and stuff.
Yeah, that's true. It's true. Alrighty, and let's see. Bravo also said, hey, I think a TLT level getting to a good buy zone. Think about it for 30 years. It's a good return on bonds with 2.6 to 3% yields. So I'm going to disagree with this one. Like, yes, rates have been rising, but at the same time, I'm not going to buy TLT, which is essentially just a bet that these yields will fall. I just don't see it. Like the Fed straight up said that they expect like 6 or 7 more rate hikes, and they could be hiking rates in an even more aggressive way than everyone is expecting. On top of that, the inflation problem is not getting any better. So, like, anything can happen, but it's just not something I would ever, like, risk my capital on, especially at this time. Like, maybe if we got closer to the end of the rate hike cycle, maybe I would consider buying TLT, but it's just, it's definitely not something for me with all of the current events we have going on.
Yeah, me either. Like you said, maybe towards the end of the rate hike cycle, like maybe at the beginning of like 2023, or maybe like the first or second quarter of 23, maybe around then it'll start to be a little bit more enticing to me. But yeah, right now I just don't see it either. Obviously in the past, TLT has had some pretty big moves, but also keep in mind that TLT was moving up this big heading into a very strange event, as in COVID. So we have to keep that in mind as well. But either way, I think I would definitely hold off as well. And, right now with all the good opportunities in growth stocks, I feel like we could maybe get some good growth in other parts of the market too.
Yeah, and like another thing, Tom, just like you pointed out with COVID and TLT, like basically when rates fall, TLT goes up, right? Like rates literally fell to basically 0% when COVID happened. So it's like, yeah, of course TLT is going to rise the way it did. And then Bravo also said, he said, oh, you think TLT heading much lower to 120? Honestly, I just like other stocks and opportunities so much better where I don't even bother with TLT. Because I feel like TLT, like it'll most likely continue to trade lower as rates continue higher. But at the same time, it's like just because I think something's going to continue lower, it doesn't mean it's worth the investment. Like if I think rates are going to rise and I think inflation's going to get out of control, it's like, all right, yeah, I can short TLT. I can do all of these other moves, or I can just buy gold and hold it for the next 5 or 10 years. You know what I mean? And then I don't have to worry about, short borrow fees. I don't have to worry about, the ETF managing, like switching their positions. It's just like, I just like gold and silver a lot better because I can't really go wrong with them. Like historically, they have great returns against inflation. It holds its value very well. Like there's not really much to manage about it. So it's like, that's why I'm not even really bothering with TLT because it's like, I just feel like there's a lot of reasons why just gold and silver are a better setup. And even if check this out, like let's say I'm trying to play rates rising, right? In one situation, I can short TLT, right? And then if I'm wrong, then I'm wrong and I lose. But let's say I'm also trying to play rates rising and I buy gold. Like even if gold falls in the short term, historically it has done very well anyways. So like I feel like it's just like a better situation with gold and silver where I'm not even bothering with TLT for a play like that.
Yeah, I don't think I would bother with TLT either, especially for like the longer term. Like obviously maybe like for like a couple weeks swing down, or like maybe if you think the Feds are going to do something in the short term, maybe it could make for a good play. But I feel like also TLT, Mike, has like a lot of volatility, like it consolidated here for a long time before finally selling off. And as it's been selling off, it's not like it's been straight down either. Like there's been a lot of volatility in between here. So I know the past couple days have looked brutal for it, obviously, but obviously yesterday with Brannard, she didn't help at all. But today, or I should say like the past couple months, like ever since the beginning of the year, like of course it's fallen, but keep in mind like it'll only fall for like 3 or 4 days and then have like a ton of consolidation. So it's kind of hard to time this one, I think, in a good way. You know what I mean? Like I know a lot of people were bearish whenever Michael Burry started entering, and then TLT rose and started consolidating forever. And I think that's whenever people started realizing like, hey, this is a longer term position that he's in or something. You know what I mean? Like, I feel like too many people were looking at Michael Burry's positions and then they were thinking that TLT would tank down right away. But as we know, the market takes sometimes a couple of years to play out certain scenarios, kind of like what we've been seeing.
Yep. All right, Tom. And then we have Johnny saying, good plays for cash secured puts or wait till later this week. If you wanted to wait towards like the end of the day or like tomorrow, I don't think that would be a bad idea because we don't know what the FOMC minutes will look like. At the same time, you can't really go wrong with cash secured puts. So as long as you're selling the put at the strike you're comfortable owning the shares at, then you're fine. Of course, no one can catch the exact top with cash secured puts, but I feel like it doesn't hurt to enter some plays now and then maybe enter the rest of them either later today after the minutes or even tomorrow morning. But I do think it's still a pretty good time for cash secured puts.
Yeah, I do too. Like, and honestly, if you have enough capital to maybe get like multiple cash secured puts, I would say like one maybe today as like safety would be pretty good. And then, if like in Zoom's case, for example, it starts falling back towards $100, maybe after the minutes come out or something, then maybe you could maybe enter a couple more, like maybe at like the end of the week or something. But I definitely feel like it's still a good position here, Mike, as well. And what I really like is that a lot of these growth plays are still off their lows by quite a bit. Like Zoom's low is $94. So like, there's still a lot of room to the downside. Like Zoom could fall maybe to 100 or like 105 or something and still start to come back up. with some pretty good authority. Like with the way it's falling here today, of course it sucks to see it down 6%, but whenever we look at it over the past year, 6% is not really that bad. You know what I mean?
Yeah, yeah, exactly. All right, Tom. Well, do you have any last-minute plays before we close out of the stream?
Yeah, some of these stocks this morning that were doing pretty hot, like Pfizer, look like they just continued to do well today, running up to almost like 52.85 today. I mean, that's a pretty big move out of them. We continue to see Oxy rise. They're making new highs today. They're now up 3.8%. So if you're looking to play something to the upside, maybe like Pfizer, AbbVie, ABBV, maybe like Oxy, those types of stocks might be good to the upside. I'm also starting to see my AMC has been slowly climbing up this morning, believe it or not. I know they got really close to their $20 support. They ran almost up to $22 here after market open. Looks like they do have a lot of volume coming in today. So I will say AMC is definitely surprising me. It's definitely doing better than a lot of the growth plays. So I guess I know, Mike, a lot of people talk about AMC likes to rise when the market falls, but yesterday that was not the case. But today it looks like it definitely is outperforming a little bit.
Yeah. All right, and with the last comment, we have Bravo saying, so SPY towards 439 to 440 by 2 p.m. or heading lower. Well, 439 is quite a bit. Like, anything's possible, but that's a pretty big move. So I would say that's unlikely unless the FOMC minutes report was really bad. Like, of course it's possible. It's just, given the historic returns of the S&P 500, especially in a day, touching 439 or even 440, it's possible, but it's definitely unlikely.
Yeah, and let's go back over the past couple of maybe ever since almost the beginning of this year, just about. There's only one day where the SPY fell that much intraday that would make it fall from let's say opening price today of 450 all the way down to 440 or 439, and that was back on, it looks like January 24th. So besides for that one day, unless we see another sell-off like that, I mean, we're not going to see a move down to 440. Like Mike said, that's pretty unlikely. It's a pretty big move down to there, although we do have a big catalyst with the minutes, so it's definitely possible today, I think, than most days. If we would have said this maybe last week or something, I would have definitely thought it was crazy. But I guess it is possible with the FOMC minutes coming out, but to see it go down to 440 would be pretty drastic. And if that does happen, I mean, we'll have I think we'll be seeing a lot of huge articles come out. We'll be seeing a lot of crazy information about maybe an interest rate hike of maybe 0.75% or something crazy like that. And Mike, I know that the Feds have been kind of pricing in, or I should say the market has been pricing in a bigger rate hike. What's it at now? I think last time we looked, it was 0.75 to almost 1% was leading the way.
Yeah, that's it right now. 75 to 100 basis points. Currently has a 76.6 probability of being the next rate hike. So,
wow.
It's definitely, the market's definitely pricing in a larger rate hike. So that's interesting. And the next meeting is on May 4th, so we'll know then.
Yeah, that's going to be big, but like he said, 439 or 440, that's going to be pretty low though. I would not bet on that today at all. Maybe I would, if we break 444, I would maybe try to scalp the SPY really quickly, maybe catch a nice maybe 10%, 15% on some options, maybe get in and out really quickly. But other than that, I don't think I'll touch it, Mike, because the volatility is going to be nuts. And, I've seen scenarios where whenever the minutes come out or whenever Powell speaks and stuff, sometimes the market will tank down for 5 minutes and then roar right back to life, or it might just go crazy with the volatility, start looking like a heartbeat monitor, start going all over the place. And if that happens, it's going to make it super hard to day trade. So I feel like the SPY will almost be better to stay away from today. Maybe it'll be better to maybe get into some of these overhyped tech stocks, or maybe if you see AMD or something break below its low of day and start heading towards 100, maybe that would be a better play.
All right, there we go. So before we close out, I just want to personally thank every single one of you for joining. So shout out Keisha, Michael, Jeremy, Lou, Hunter, Jerry, Mike, Vicky, Mink, Sean, No, Raymond, Bravo, Iranical, and Johnny Leverage, and and then Couch Potato. So thank you guys so much for joining the stream today. The market is going to get exciting over the next couple of hours. The FOMC minutes report will be huge, so definitely keep your eyes out for that. Besides that, thank you so much for watching, and have a great rest of your day.